Hello, it's John Pugliano. I have two items I want to cover with you really quick. The first one deals with Starbucks. I've received a lot of questions from people that know that I own the stock, and they've asked if I have sold it or if I plan to sell it. No, I haven't sold it. If I do, I'll list that over at my firm's website on the blog post like I always do. As far as Starbucks goes, I think there are three main concerns that the market's had with it. It's performed horribly so far, the first 3 months of this year. I've owned it and have added to it several times over the past 2 years. So, what I bought pre-pandemic is about back to where it was. What I bought right at the early part of the pandemic is up considerably, but then what I've purchased in the last 7 or 8 months, not so much. So bottom line here, in these three items that are, I believe, affecting the stock price. Number one, it is overvalued. It is a highly valued stock, even though it's pulled back quite a bit. I'm not overly worried about the valuation. I guess I'll get to that last. First item, though, the one that I'm least concerned about, and this is not only with Starbucks, but in general, the stock market in general right now. And that's that I'm not worried about the economy. I'm not worried about inflation. I don't care if the Fed continues to raise interest rates. I don't think the war in Ukraine is going to affect the U.S. consumer. Or let me, I guess, rephrase that. At least not much concern that the inflation and things are going to affect the clientele of Starbucks. Listen, people that go to Starbucks are not looking for the cheapest cup of coffee. Otherwise, they wouldn't be at Starbucks. They're there for the ambiance. They're there for different reasons, and they're willing to pay for it. So, of course, there'll always be the incremental person that can no longer afford it. But for the most part, I'm not worried about the economy affecting the Starbucks customer at all. Second main problem that people have or they're concerned with is the unionization of the labor force and the continuation of what appears to be poor or degrading labor relations with Starbucks. I don't know. Listen, they're getting a new CEO now, and we'll see if he can address any of that. Overall, I'm not really that worried. Starbucks is really a world-class employer. They generally always have, or in the past have had really good relations with their clients, with their customers. I know it's, a little maybe either a concern now or it's being highlighted more in the news than it had been. But bottom line on the unionization problem and problems with their workforce, I think that overall the caliber and the happiness of their employees seems to be intact. And Starbucks is a good employer. I think the big ace in the hole that Starbucks has, and I'm actually surprised they haven't played this a long time ago, but it's robotics and automation. Much of the workforce, I believe, could actually be replaced with robotics and automation. There are definitely robotic baristas out there that can do a lot of that work. And so if labor relations become more extreme, or if the employee, or if the performance and effectiveness of the individual employees is not matching what they're being compensated for, then I think long-term, a lot of robotics and automation will come into Starbucks. And I think that's ultimately going to happen anyways. That's also why, long-term, I believe the manufacturing situation in the United States and a lot of other industries are going to become much more effective. And we're going to see not only more manufacturing and more products made in the United States, but at higher profit margins, not at lower profit margins. It's all about automation. It's a trend that's been in place for a long time. It's going to continue. Starbucks will eventually jump on that bandwagon. The third big thing, and this is really what I'm worried about and have been worried about with Starbucks, and it has to do with the valuation, but it's not the valuation itself, it's China. As long as Starbucks can grow and expand in China, then I think that the valuation that is on the company is a fair valuation, and that they will go on to make all-time record highs, and they'll have very good, successful growth in the future. But it's really all dependent on that growth and expansion in China. And that's a little worrisome. It's especially been worrisome over the last 6 months. And that's not only because of the slowing down of the Chinese economy. That'll get worked out. The big concern has been the regime heavy hand with American companies and really with Chinese industry overall. If you've been following the Chinese situation, you know that they've have really come in and been harsh with shareholders and stock prices and things of Chinese companies that are listed on the American exchanges. And I think that Starbucks is not in that group of high tech or social media or education, gaming, the things that the Chinese have gone after. I don't think Starbucks fits into that category. And Starbucks has also had a very good working relationship with the government of China. So I think that will improve. But again, that is my big concern at this point. As long as they can get past those problems with China, I definitely think that the United States operations for sure are going to be extremely profitable. And so for now, I'm holding on to Starbucks. I have no intentions of selling it anytime soon. I think it'll go on to do bigger and better things. The other item I wanted to talk about, or at least mention, it's actually a question to you, the viewers. I've heard from some of you that have said, hey, you like the charts and graphs and things that I show on the podcast, or excuse me, on this video version of the podcast. Because incidentally, if you don't know, the podcast, the audio podcast, is most of the time totally different material. Occasionally I'll simulcast something, but the audio version of the podcast, totally separate. My blog post, again, covers the same theme, but different information. That's more about specific comments I have about the economy or when I'm buying or selling a position. And then this is more of a means to try to communicate visually when I have, graphs or charts or things like that. A number of people have said that, yeah, they like the charts, but they would really like to see more of me in front of the camera. I'm not sure why. That doesn't resonate with me, but that's been the comment. So I guess my question is, do you really want to see more of my facial expressions and have me talk more about things looking at the camera, or would you rather see the charts and graphs? I know some of you are going to say you want to see both. My time is limited. I'm not a full-time, media content provider. I'm a money manager. That's what I do throughout the day. The rest of this stuff I just do, as a labor of love. So let me know what you think. And I know a lot of you always said you just want more content. I'll do my best on that. Well, hey, as always, thanks for watching. Until the next episode, this is John Pugliano wishing you the very best returns.